Hey guys, thanks for joining me for this one. In this video, we're going to be going through my dividends that I've received in my Wealthsimple account in the last month. Then I'm going to turn it over to Excel to kind of go through it a bit more by sector and also where I'm investing or have invested these dividends that I've received, just so you guys can start getting an idea of how I'm compounding my dividends even before putting in new capital into this account. If you like this type of content, be sure to like the video below. It really does help with the YouTube algorithm. And we will just get into this. I won't spend too much time on this tab here just because it's not the most user-friendly tab. But this is just scrolling through the dividends that I've received in my Wealthsimple account in the last month. You'll get a better sense on the Excel document. But it's great to have dividends coming in almost every week. You see here June 15th got a handful. The week of June 9th got a handful as well. Beginning of the month, June 5th, June 1st. End of May also we're getting them. So I like constantly getting income flowing to this account May 31st, May 15th to reinvest into the portfolio without even putting new money in necessarily on a weekly basis. So once you really build out a dividend portfolio, that's one of the great things. You constantly have more ammo to invest into the market, for lack of a better term. So going over here, looking at the summary of my dividends that I received in the last 30 days, starting from the top, I got paid $20 from Procter & Gamble. These are all also Canadian denominated, so I slapped a 1.3 foreign exchange rate from the USD stocks that I hold. A&W Royalty, for those of you who have followed some of the other videos and stocks I'm buying, is one I've been really trying to build up, and that one is up to $65 a month. As of last month, it's even higher now. Diversified Royalty Corp, $43 a month. So just going to do a quick calculation here to give you guys a sense on an annual basis. Actually, that's not working because some of these are monthly, some of these are quarterly, but even Div, for instance, which is a monthly company, that means I'm getting paid over $500 a month a year in my Wealthsimple account just from that one stock. Keg Royalty, really small position, is $5 a month. Visa pays a quarterly dividend. It happened to land in the last month, $19. Fortison, Canadian Utilities, also quarterly dividends, collectively over $140. And then I have my monthly paying ETFs as well as REITs all the way down here. So ZDI is an international REIT. ZWC, ZWB are Canadian covered call ETFs. RioCan's a real estate REIT. Cash is an interesting one. This is where I just park lots of my available cash. With interest rates this high, I really don't like putting cash just in a checking account. This account pays me, or this ETF, high interest ETF, pays me about 5% on my cash. And you can just see on a monthly basis without doing anything, no risk essentially. I got over $58 in a dividend for my cash holding. So this is something that I definitely can tell you guys to consider looking into if you're holding a lot of cash. With that $58, I can go ahead and buy, another Fortis share, and that will then compound for me over and over again as they increase their dividends. So that's something to consider. Life, this is a covered call global health ETF, so they own lots of pharmaceutical companies, stuff like that. Microsoft needs no introduction. And then all of my REITs down here. Realty Income is a relatively new position, but I've built it up to a decent spot. First Capital, Allied, CapREIT, Northwest Healthcare. This one's been struggling on the stock price, but they haven't cut their dividend yet. So still getting a pretty juicy yield there. Overall, in this account, I got over $680 in the last month. I'd say that's probably indicative of what my average month is in this particular account. You see some of these one-time payers like Fortis, Canadian Utilities, some of the larger ones, but I really have quarterly paying dividend stocks that are hitting every month of the year. So while Fortis and Canadian Utilities won't be there next month, I may get CN Rail and Restaurant Brands International paying me the same, if not more. So I have a lot of companies that hit every single month of the year, whether that's monthly distributions like most of these are with the royalty funds, the REITs, the ETFs, but even the quarterly ones are pretty well diversified out. So if I was to say this was an average an average month of the year, this account would be paying me over $8,000 in dividends annually, which is a pretty good position to be in. We'll keep building it up, and maybe I'll even do another video where I do show the true annual dividend income I get from this account, but that's just a quick proxy if I assume this was an average month. Going over into the different sectors. So this one was interesting for me, just to get a look, and I know it changes month to month, but directionally where the income from the last month came from. Out of the $680, which I'm assuming this will net out to, yeah. A good chunk of that is ETFs. If we go here, sorry to make you guys watch me do some Excel, 23% there, or 24%. So almost a quarter of my monthly dividends is coming from ETFs that I hold in this account, and those do come every month, very stable. Looking at some of my other high dividend paying sectors, REITs have always been a big part of my stock portfolio. So that's another area where I'm getting a good chunk. Between the two, I'm almost getting 50% of my income from the month, and then the rest is really segmented out. Restaurants getting a good chunk there. I tend to like restaurant stocks, especially the royalty stocks. I feel like they're pretty stable. With that being said, it's probably an area with higher volatility, both in increases and decreases, since it's directly tied to the revenue of the company. They don't tend to hold a lot of cash on hand on the royalty companies. So it's one that I've been trying to pare back from investing in too much, aside from A&W. So that's the one that I've been building. But across my portfolio, my other restaurant stocks, Restaurant Brands International, Keg Royalty, Pizza Royalty, I own a couple other accounts. Those positions I've kind of halted on. I'm taking the distributions, I'm allocating it to other stocks that I'm trying to build up more aggressively. The one thing that I notice I don't really have too much of in this account is my consumer staples sector. Only $20 in the last quarter, and the only other consumer staple stock I have, I believe, is Coca-Cola. So that dividend didn't land this quarter, but that's also not a huge position for me as well. So this is a sector that maybe I should be paying more attention on, taking some of the distributions from the other portions of my portfolio, investing it more in new consumer staples companies or more of the companies that I have. So that was the big eye opener, only 3%, under 10% collectively between consumer discretionary and consumer staples. Lots of this is tied up in REITs, ETFs on a month-to-month basis. So just nice to do a quick little look at where the income's coming from. In terms of the two stocks that I bought most aggressively in the last month, where lots of this income and some new capital did go towards, those two stocks have been Coca-Cola and A&W Royalty. Now, it's really hard to cut out exactly what dollars went where because I'm constantly putting more money into my account as well. So just to ballpark it, if I assumed I put half of the dividends I got last month into Coca-Cola, half of the dividends I got last month into A&W Royalty, and ignored all the new capital I put into my account, I just want to give you guys a sense on how I view the importance of these dividends and how they've been continuing to compound year over year, month over month in my account. So hypothetically, if that $680 was recurring in terms of my month-to-month income in this account, I'll still get that $680 next month, may even get more if I get some dividend increases across my portfolio. But I've been able to use the $680 I got in the last month to buy approximately 6 shares of Coca-Cola, 9 to 10 shares of A&W Royalty, if I assume that I split it down the middle in terms of the income I got from the last month. Those $340 investments each would end up deriving 85 cents in monthly dividends on Coca-Cola and $1.52 in monthly dividends on A&W. So on average, we'd be getting almost $2.50 more in dividends than I did in the prior month. And then on an annual basis, that would be about $30 more. So without even putting any new money in my account, just reinvesting the dividends into opportunity areas and areas that I want to be diversified more into, I would increase my monthly dividends by $2.50 just in this account, just from last month. It doesn't sound very big, but when you compound that, when you do that month over month over month, if you do that for a year, and let's just say I pick the same 2 stocks, this is the impact you'd have just by compounding the dividends in this particular account. You'd get almost an extra $1 a day for the rest of your life in dividends. And this isn't even including reinvesting the reinvestments month over month. So you can really see it start to compound. It would realistically probably be closer to $30 a day, a month rather, $360 a year, give or take. And that's without putting any money in the account. So it's a lot of different ways to fuel dividend growth in your portfolio. Reinvesting dividends is a really important part of it, and hopefully this somewhat showcases how that can come to life. So yeah, I just wanted to share the last month of dividends I got in my Wealthsimple account, share where that income's coming and how I think about redistributing those dividend incomes for larger dividend income checks in the future. If you like this type of content, be sure to subscribe to my channel, and definitely give this video a thumbs up, especially if you made it to the end. Not many people make it to the end, so it's great when you do. Let me know in the comments as well. Hitting the thumbs up button really does help a lot with the YouTube algorithm for smaller channels like myself, so I do really appreciate it. And I will see you guys in the next video. Thanks.